All right, let's jump into it. So it's what are we at? 10:57 on the 18th of October, so Saturday morning. So another week wrapped up, and look, US shutdown is still ongoing, which is a very sort of odd, sort of weird kind of sort of situation, really, because I mean, look, apparently the longest that they've had is well, not apparently, it is the longest they've had is 35 days. And, there's all this sort of speculation that this could be the longest one ever. But at the moment, to me, it kind of seems like there isn't any sort of progress in them sort of moving towards coming back and resolving things. I mean, Trump's like obviously, there's a whole bunch of this sort of stuff involved, but Trump's sort of off, sort of gallivanting all around the world. I mean, look, he's ending wars and bringing peace to everybody and all this kind of sort of stuff. And look, I'm a fan of Trump definitely, but look, this sort of stuff at the moment just doesn't really seem to be getting resolved at all. And on top of that, you seem to have endless sort of Fed speakers. I mean, look at how many times these Fed speakers are sort of going on throughout the week. Almost every single day. Look, Mirren, Waller, and another thing on top of that. Look, Mirren, Waller. Then we go Waller again, Mirren again, Bowman again. There's Barr, and that's over the other side there. But it's these three: Waller, Mirren, and Bowman, and they're all very dovish. Like Mirren's the new one that was sort of like Trump appointed sort of thing, and he's the one that's trumpeting for the 50 base point cuts. Waller and Bowman are the original sort of dissenters. They're the ones that sort of like, while everybody was sort of saying, hey, look, we need to go a little bit more cautious. They were the ones that were pushing for more of the cuts. And the one where we kind of really started to see the market drastically respond to the Fed speakers. Because in the past, it's always, okay, yeah, there's Fed speakers, but, we kind of know what's going on. These guys are coming out now and they're sort of like, no, we got to, so the jobs are screwed. We need to cut. We need to boom, 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 push, 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 push. So very dovish kind of talk, and it's making it inherently difficult for the DEX, why the dollar, to actually hold on to any of its gains. So we saw a little bit of a push up off the lows into the end of the week, but it's been pretty crazy for it all, and this is what's been feeding, I mean, among a lot of other things, obviously sort of feeding that sort of big sort of gold drive as well. So anyway, so in terms of data, not a great deal to sort of report on because we're just not getting anything out at the moment. We did have a little bit of sort of data through the week. We had some very weak Aussie data actually on the Thursday. This was a big sort of kick up because if we go back and so where are my notes here? Sort of look at sort of what Bullock was sort of saying back in whenever it was, a couple of weeks ago, and that where they had the sort of the the last rate decision. Of course, and this is a good thing now that they've changed it. It's been a little while since they've done it, but we get the press conference afterwards because we never used to have the press conference after the RBA. But regardless of that, sort of like obviously inflation quarter on quarter was the big thing that she's looking at in that side of things. But the mention of sort of like jobs or more importantly out of these two bits of data, the unemployment rate ticking up 4.3%. That was actually revised up from 4.2. So it was revised up to 4.3. They were expecting a slight tick up to 4.3 anyway. Jumped to 4.5, which I'm pretty sure is the highest we've seen in quite some time. Certainly as long as we've got on that first one back there. 4.5, where are we at? Yeah, so we're looking back January 20, no, December 21. December 21, it was at 4.6. So, that's obviously sort of picking up, moving in that direction, and you got to play these things out. Well, if the unemployment numbers are ticking up like that, look, it's just one print here, but it is a big jump up. It's 21, so that's what, sort of 4 or 5 years or so now, since we've sort of had that level, 3, 4 years. That's sort of moving in that direction that, promotes the idea that the RBA are going to cut. Like we know they're in a cutting cycle, but are they going to hold? Are they going to cut? That's the question. And certainly, if you see numbers like that, that's a bit more in the cut. I didn't actually see this is also revised down last week. Last month for the job numbers, negative 5.4 to negative 5,000. Did jump up. It's one of those sort of grey area kind of things because the expectation was, surprise, surprise, 20,000. 20,000. They spammed 20,000 with their predictions. But 14.9. So look, it's obviously an improvement, but under what they were expecting, which you kind of think, okay, market's priced for 20,000, maybe. I mean, surely I'm not the only person who realised how sort of ridiculous their 20,000 um, sort of estimates are. But the point is, it was a slight sort of increase there. So, I mean, look, it's a grey area one there. It didn't meet the expectation, but it was a push up from last month till we see that revised. Unemployment rate, that's probably the more important of those two bits of data there. And also, we had Bullock speaking that morning as well, sort of saying, hey, look, 4.2%, it's not too bad. Well, 4.2% revised to 4.3, and then actually the new data coming in at 4.5. So yeah, look, that's certainly in the camp of a bit more sort of Aussie weakness with that sort of little bit of data there. But on terms of US data, not really a great deal to sort of speak of. We had a bit of sort of manufacturing numbers here. We got Philly. This is the one that jumps around a fair bit, as you see. 23.2, expected 8, came in negative 12. There's a very wild, the sort of, if you look at these sort of previous ones, negative 4 to 15, 15 to negative 3, 0.3, like very big swings with this kind of stuff here. All right. So let's have a quick look at the week ahead. One thing we are going to be getting this week, despite the sort of shutdown, is US CPI. So this is something along the lines of they're going to need it for, maybe like doing their year-on-year kind of sort of judgments or something like this. So it is set for Friday. Obviously, sort of we'll get to that sort of at the end of the week, but at some stage, they had NFP listed for the Thursday, but again, look, that's lockdown, shutdown, whatever. It's not coming at the moment. So, starting from the start of the week, and now we got Monday, we got CPI in from New Zealand. New Zealand, obviously, they've been on mega cut kind of sort of stuff. This is quarter on quarter. CPI quarter on quarter, that's very low. So you'd sort of think they'd want to sort of get that up a little bit, but yeah. Anyway, quarter on quarter, slight sort of tick up with it all. They've been cutting very aggressively. They last week, was it just last week? There was a 25 base point cut, and they actually shocked market with a 50 base point cut, and obviously that got a little bit of a whack on the back of that as well. Those shock ones were with the rate decision. I mean, rate decision is what I call the tier one bits of data. Everything else kind of is a little bit more sort of piecing the bits of puzzle together as to what they're going to do with that rate decision. So that's a bit of a standalone one. And obviously, sort of when they do a bit of a shock, 25 base point in this case to a 50 base point, well, that's what's going to give you a pretty sort of sharp reaction. So we've got a little bit of China data coming out now. Just have a quick. How are we looking with that? Yeah, holding its main supports. I'll get to that on the charts with the one in the moment and that. So we'll see a little bit of sort of stuff coming out. Look, China's a very sort of odd one because it's sort of like, you hear some sort of reports that they're sort of like, oh, they're really struggling, really struggling. And I'm sure like on maybe some parts of the economy they are. You're never really sure because you can't really trust the Chinese data so much. Um, but then you see other sort of advancements that they're doing, and they really seem like contender with the US on some fronts with stuff. So it's a very very sort of stark contrast across the board with their sort of stuff. But in terms of their data, I mean, a little sort of side note with them that the reason, apart from not being sort of like the dodgy Chinese, but like one of the reasons that their data is not so reliant on being sort of completely accurate is because sort of a lot of the people on the local sort of fronts, they'll sort of get like promotions and they'll get sort of like, maybe I don't know, kickbacks or whatever based on how well their data is doing or how well their region is doing. And so then they sort of may sort of artificially inflate it to make themselves look better, but then, that data then is matched against the next month. And, you've got to inflate that a little bit more to make sure that you're looking a little bit better to get your sort of kickbacks or whatever. And then that just progresses on top, on the top, on top, on top. And it gets to such a point that it's been sort of, artificially inflated so many times that if they were to actually come out with the real numbers, it would look like, oh my God, the economy's just fallen in a hole and it's absolutely shocking. So it's one of those sort of things that, like, eventually, it may probably be better, which I don't think they'll ever do, rip the band-aid off and just sort of go, hey, look, you know what? Here we go. Boom, we've done these are the real numbers. it'll look like the economy's probably just gone into a massive recession and that, but at least like you've got a new baseline and then you can build off that kind of thing. But yeah, with that sort of feeling and that, I think that's why a lot of the data is kind of taken with a grain of salt and that, and it's like, okay, we'll see how we go. But yeah, anyway, bit of data coming out for China and that on the Monday there. Short of that, not really a great deal. Assistant Governor Jones, no idea. So did maybe see. I don't think that'll be really much of an impact in that. Nothing through the Tuesday. CPI over in Canada, how are they going? So 3%. Okay, so generally about this sort of thing. I think it's one of those sort of things, very much like first 90% takes as long as the last first 95. Start that again. Last 5% takes as long as the first 95% or something, whatever the thing is. Point being is everybody's got down from 7 and 8% inflation, but everybody seems to be quite sticky around 2 to 3%, which is a ballpark band of what they've sort of said that most people are happy with, but overall 2% is the target that people would want to get back to. So obviously just sort of seeing a little bit sort of sticky over there. Canadian dollar's actually been super weak as well. So I wouldn't be surprised if you sort of this is pushing more to the idea. Well, I suppose actually if that inflation's hanging around, maybe it makes it a little bit more difficult for them to cut. Anyway, we'll see how we go. There's a couple of different sort of reads of this one here. You got core, common, trimmed, median. I mean, come on, how many times do you need to cut it up? Okay, and onto the Wednesday. Again, nothing. So very quiet on the data front to sort of start the week off here. We got surprise, surprise, Waller speaking, and then Waller speaking again. So I don't know why. I mean, what do you have to say that you're sort of doing speeches sort of 6 times a week, and then sort of like a couple of hours apart? And as I said, it's always these ones that are super dovish. So it is something to keep in the back mind, particularly if you're doing a short term trade, in my opinion, because sort of you can be looking good, and then these guys come out say the same thing that they said the day before, and the market's like, oh my God, whoa, we've got a cut, they got a cut, okay, yeah, so and the market reacts off it. So yeah, it's very very frustrating. Anyway, on to UK. UK a little bit sort of hotter with their CPI over there. And this again sort of makes it sort of a little bit more difficult for them if they are sort of looking to cut. What are they at sort of rate wise? I've got it over here. So they're at 4%. Okay, so they've got a little bit of room, but yeah, so 3.8 looking to tick up a little bit to 4%. So definitely hotter than you'd sort of want to have. The whole sort of talk with inflation was everyone references like the sort of 70s where there was like a massive spike, came back down, and then the second one was of this huge one that trumped the first one. Doesn't look like it's going to be the case at the moment. I think it's more just a sort of a matter of sort of sticky inflation, which, you know, once you've got, like, because I covered it the other day, their unemployment is a lot higher. I can't remember what it was, but I think above 5%, 6% or something like 6 or 7%. It was quite high. Um, but you know what I mean? That's kind of like when you're going into stagflation. Like, you know what I mean? If you're, it's you have to sort of like kind of stimulate the economy and that to sort of get people hiring, get GDP numbers up, get retail numbers up, get all the economic data to sort of push forward. But then when you've got inflation that's also increasing at the same time, you see, you can't sort of really necessarily do one which is just going to exacerbate the other. You got to pick your poison as to sort of which direction they want to go. But that's that stagflation where they're kind of like, in a tough position where they need to cut, but they can't cut because inflation is going up. So yeah, a little bit tough for them over there. So not looking too good over in the UK. Come through to Thursday. Look, is there anything actually through the whole week at all? We've got a couple of little bits and pieces here, but nothing that's going to be sort of moving the market. We've got retail data over in Canada and that 1%. How's it sort of go for them? Yeah, it's about on par with what they've sort of been seeing. Existing home sales over in the US. Very, very quiet. And then PMI days sort of coming out. We've got Bullock speaking on the Friday morning. And we got, as I said at the start of the thing, we got sort of CPI coming in for the US, which we haven't actually got a sort of, we got month on month and core and all this kind of stuff here, but the year on year we haven't actually got there. So that's sort of standard with what we've been seeing there. So it's ticking up here a little bit actually. If we look at the sort of the month on month is yeah, sort of looking to come in at 0.4. So obviously moving in that sort of direction. What's the core doing? Core, Yeah, look, every month, yeah, 0.3. So I take that one with a grain of salt. But I actually have been right the last two times. So again, look, these sort of things, they're a little bit more sort of in the idea that you probably see possibly a little bit of US dollar strength on that kind of stuff there, if inflation is going up, because it's more in the camp of hold on, wait. Because this is the thing at the moment, because we don't have the US data, we don't know what the jobs market's like. Jobs is what they were touting time and time and time again. We don't know at the moment. There was a report out that I saw yesterday where a couple of these banks put together their unemployment numbers or their expectations of what I guess they're working off based off, I think more local, state level kind of data, because I think it's a sort of a national level that it's sort of they're on shutdown with. So I think maybe on the state levels and that. So they pieced together a couple of these bits of data to give themselves a bit of a rough estimate of what they're working off. And their estimates were that the job unemployment numbers, which are the weekly ones we get, were actually down a little bit. So the sort of situation with this at the moment is that with the job markets down, so the job market being in the spotlight, and okay, jobs are getting bad. We know NFP's been bad, this kind of thing. But they sort of summarized it as basically a no hire, no fire kind of situation. So it's sort of like, okay, people may not be hiring, so NFP and all these numbers may not be sort of moving forward, but people aren't getting these mass layoffs. So I think ultimately that doesn't paint a great picture because, obviously it's just uncertainty. You think about it, look, we're not going to fire you guys. Well, we're not going to lay people off because we're not in trouble, but we're not going to hire quite yet because, again, we're not sure about what's going to happen moving forward. So it's kind of like, okay, you're not in trouble, but you're not 100% confident. You're unsure. And this is possibly why what's been leading to, so obviously, a bit of gold going through the roof because that unsurety. So the point is that sort of like while jobs was in the spotlight, if we see jobs not be so much of an issue, but we see inflation push up, means you take away the response of dealing with the jobs, which would be cutting, and you deal with the inflation, which would be holding the rates. So it would be ultimately dollar strength, given that sort of scenario. And as you can see, it is slightly ticking in that sort of direction at the moment. 2.9%, 2% is the target. See what the market's expecting. But if we look at the last couple of prints with the month on month, it is moving in that direction. 2.3, 2.4, 2.7, 2.9, it's moving up. So inflation is an issue. It is moving in that higher direction. So, what you need to do with that is obviously hold rates. You wouldn't be cutting in a preferable world. You wouldn't be cutting into a rising CPI if jobs aren't an issue. But if jobs are an issue, then same as I said before with the UK, pick your poison. Do you sort of deal with the jobs and potential slowing of economic data and as exacerbate the inflation? Or do you say, hey, hold on, wait, the data's not too bad, which the data isn't too bad from the US at the moment. And so if jobs aren't too bad, but economic data's okay, but CPI is going up, you probably won't cut into that. That's my take on it all. So it's a very, very interesting sort of situation, but it's just made inherently difficult by the fact that we haven't got the US data at all. So anyway, look, so that's a bit of the data. So all in all, pretty quiet sort of week, a little bit of US data to the end of it. Okay, let's have a look at the charts and that because gold was finally had a little bit of an actual sustained pullback, probably the biggest pullback we've seen in a while. We did have a shake early on Asia. It was around 2%, 2.4% there, which is equal, well, in ballpark, to these other pullbacks. Look at these ones. All these pullbacks, about 2% new high, 2% new high, 2% came up here, no new high, and then almost a 5% drop, 4.5% drop into the end of the week. Yeah, you got a little bit of a bounce off these zones down the bottom over here, but that was a $200 drop, which it's quite interesting actually because I mean I've been slapped a couple of times with gold here, but I did actually sort of message. I was actually talking to my father, and I sort of mentioned that these kind of mornings, like when you saw this little gap up here, have the ability to drop $200. And what did we drop? 195. So that was pretty much right on the money there. If we have a look at All my charts, I think, got cleared, but got sort of taken off here. So anyway, I was referencing this point. So it's actually that far back now that you can't watch, you can't look at it on a lower time frame. You've got to go 4 hours, the lowest you can get. But if we go way back, December, where are we at? March, yeah, yeah, this point here. So this big point here was December 23, and this is at the time was just insanity. Opened up, start of Asia, bang, shot up like $75 or something like this. But this whole move here, 5% move up into the highs over here. This is, I put a chart up on X at the time, and if we have a look, whoop, so that was then, this is now. And if you look at this move that we had sort of coming up into this, put this on 4 hour as well, so you can see the move. There we go. This is the chart, well, similar chart. I may have used a different gold chart at the time, but price action wise, this doesn't show such a big wick actually, which, whoops, that one. There's a problem with so many of these charts and different feeds. Maybe this one? Yeah, this one here. Um, Given that, say, okay, you got a little bit of a pullback here, and damn, now I've lost this one. One sec. No, there we go. So a bit of time sort of flying back and forth. Anyway, similar price action with this kind of move in that we had from the last little pullback here, using that as a base. So your last drive up, 5%. This one came in like 4% or so. So very similar price action, both off the back of a very big move up. Like this is obviously not as much as we've seen just now because that's insane. But the point is, at Asia Open, gap up, and you can't see the gap on this one, but it was a gap up, and then it sort of bang ran up, another $70 or something like this. The resulting price action afterwards was quite steep sort of pullback. Yes, in time, boom, we obviously went to where we went. But yesterday we had that gap up, we had a little gap open, and then we went to close it. And as I covered sort of 2 seconds ago in that's not doing very well with these charts here. Let's get back onto the main thing here. All right, there we go. So we had this little sort of steep pullback at first. That's right. So gap up, ran up first here. Couple of rejections. This is on lower time frame. Had a little bit of a triangle which failed through this point here. Quick little $100 drop off, and then boom, secondary sort of coming down over there. So it was just sort of like a similar kind of price action in the sense of that gap at open and then just ran ridiculously. Like we had an incredible week. If you look at, and I'm sort of flying around the charts here, but this is the futures, right? And look at these weeks. I mean, this is the one single direction that we've had the run here. Volume blowing up to the top at the top end here as well. 30%, $1,000 we've run since mid-August. So it's the 18th, that's the 18th week, and it's the 18th of October now. So that's 2 months, $1,000, 30%. And each week, you can see these ones that are lining up here. Like, so this is to this is this, boom, boom. 2.4, 3.8, 4.3, 9% we ran this week. Take that to the highs, 9.29% we ran for the week. This is my little interpretation of what I thought was going to happen after we had this big push up over here. Yeah, make sure I've actually got the wick there. That I thought, look, these big large moves up at the end of this. Like, this is not how a chart works. It's not how normal price action works. And, the technical analysis the last 2 months has just been out the window. Even fundamental analysis is out the window because you can say, okay, yeah, look, there's the Hamas situation, there's the lockdown or shutdown situation, there's the Israel situation, which I guess is the Hamas situation, the Ukraine situation, all these kind of things. Yeah, and look, that's fine, but none of these things are new. I mean, the war didn't just start. Like, it's not Hamas that just sort of got into it all. Ukraine's been going on for what, I don't know, 4 years or something now. The shutdown, that was kind of something new. But is that what's worth gold moving up 30%? I don't know. And as soon as the Hamas situation finished, um, it literally tagged out the same day on that Friday, and we had China wars sort of rear their head again. But again, it's nothing new. Yeah, okay, look, it's like, Trump sort of going, hey, we're going to put 100% tariff or whatever on you. That's fine. But the point is, it's nothing new. And, not enough to sort of like constitute a 30% rise in sort of what, for 8 weeks or something like this, 8 or 9 weeks straight, I think it is here. Anyway, long story short, we finally had a little bit of a sell down, which means we could see probably, I would say, a little bit of a sort of continuation into the early week. It's certainly not going to die on one spot, but we may be starting to see the shift of price action. I mean, that's a big engulfing candle. I mean, look, we've had sort of down day candles with a low high and it's just kept on going. So it's not to say, but that's a high volume day. This is a big engulfing, like, so you're actually engulfing, not just a down day, because as you can see here, this had a little bit of a gap down, went down and went up. Engulfing, opened above previous close, closed below previous open. So that is a bearish signal. We've been negative divergence for, the last week or so, and it hasn't really affected it a great deal, but we could be starting to see the turn of this sort of stuff at the moment. And we're seeing the same with silver as well. So anyway, that's just a little bit of yabbing on about the whole sort of idea of it all. We are actually just coming back, obviously found support pretty much close to where we had that previous sort of resistance from, what was it, Thursday or something? Yeah, Tuesday. And then so obviously lifted up here, bang, slap down here. So if you look at this sort of price structure and you sort of go, okay, look, where's it going to? I would definitely say you need to finish this move down. So which means, early move, provided we don't have any sort of drastic sort of data and headlines and that, not data, but headlines and that over the weekend. But you need to finish this move down. So it means basically, we've moved down, we've found support. This move here, we probably need another leg down here. This is going to tell us, okay, is this pullback move done? So the first move would probably, well, I'd be looking for, look, if we gap up and then a little bit down, but I would say we need to sort of work out, is this move done? Because this move could obviously still come a little bit deeper and we could be doing this. But at some point, it is going to find a support. This is why we have these previous levels of support down over here. So I'll nail down into where this could potentially sort of come to. But you need to finish this pullback move. And that'll be finished by either a double bottom or a higher low. That's when we'll go, okay, boom, and then it'll start to move up like this. Then, large stepping out of that, we're going to have this move. So we need to finish this move here, which will be this little up down in through the middle here. Once we've got that sorted, we can then move on to this leg here. And this is the big one. This is the one that's going to tell us, are we at a top, a medium term, could be long term, who knows? I mean, it's been a massive drive. Is that a long term top, medium term top? Or is this just a bigger, deeper correction to then even go even higher? We don't know. But the thing is, that's the biggest structure that we're going to be working with. But first of all, we need to finish this leg. And this pullback leg here, if we get rid of that, is going to be from these smaller moves here. And we're going to see, okay, once this pullback's done, then we're looking for a move up over here. So the point is that sort of like you could still see some shorts play out through this move here. It's a fairly decent little pullback. It's into the end of the week, yada yada. But we could still see some shorts short term in play. We're definitely still going to see some buying. I think the likelihood that this thing comes like this is probably pretty low. So I would say there's probably definitely going to be some sort of buying ops, maybe around 4,000. I mean, look, it could come in here at 41. We don't know. We'll have to work that out. But point is, there will be some buying ops. We'll get probably a decent drive. These things will sort of come, probably get another $100 or $200 sort of push up from here. It could come from 4,000, could come from 39. We don't know. But the point is, you'll get that move there. And then if this fails, again, we're on the bigger time frame here. Then you've got your lower high. The targets then become the swing back of wherever this finds itself a rally. And then if you break that, that confirms medium term high. So it's the same sort of look. I always say this. It's the same price structure. Doesn't matter what time frame you're on. You just need to sort of whittle down in between each of these moves to sort of think, okay, where are these things going to go? So I still think sort of sells like probably a good indicator is the fact that sort of like this RSI is just in no man's land over here. We did see obviously a little bit of a bounce rally into the end of the week. Again, you can't really trust the last 4 hour. I would say there's probably still some downside to come with these ones here. But I'd be sort of looking around these kind of levels and sort of go, okay, look, this is your last drive up over here. Where may it sort of be coming back to? And if we look at just this last drive here, maybe around this 61%. This is just out of 2 seconds of looking at it here. We've got a little bit of support on the way up over here. That is a bit of a target. Should have want to sort of come down here a little bit further. So I still think there's some shorts in play, and then sort of potentially look for sort of where the buyers may be sort of coming in here. But that will obviously have a bit more of an idea come Monday. Once this shutdown does finish, I would expect probably that to be one of the stronger situations at the moment that is holding gold up. And once we have a little bit of clarity, good or bad, whatever, it's just some clarity, then maybe we could see a little bit of a bounce a continued sort of sell off. I'll get this volume thing off. This one off here and this one off here, just to clear up the chart a little bit more. So if you have a look on a daily, again, this move has just been insane. Yeah, that's just one sell down there, but this is a move like this. So I would say most likely you're probably going to see this is actually a little bit of a measured move from the breakout. I always take it from the last push here, but obviously that sort of kind of flag move sort of played out there. Anyway, so I'm going to look here. I mean, look, you really just got to see how the price action evolves with this. I don't think this is it. I think there's definitely going to be a bounce. It's just a matter of sort of where we may sort of come back down to. I mean, we haven't even hit the 23%. So look, this thing could certainly come back down sort of 39.60, 39 around this zone over here, which gives you the 38% of this big move up over here. And then we could see that start to sort of move up a little bit more. So if we got, oops, drag this across over here. Of course, this is all dependent on how fast this thing sort of comes down. Let's clear up the chart a little bit. All these little sort of things that absolutely didn't work out at all. Just got a phone call. All right. So just a phone call there. So as you can see, look, large negative divergence here. This does look like we could see some continued, I know I keep repeating myself, a little bit of a move down. Look, if you take out sort of 4180 or 4190 or whatever, this sort of low from that last sort of day here, I think we could sort of, see some nice sort of, a fairly decent little correction. This is such a steep sort of move up like this. It's hard to sort of say, hey, look here, this is the trend it was on because it's just straight up with it all. You may see some sort of reaction, but I would be targeting around that 4,000. Ultimately, I think that could sort of potentially see a little bit more. Give a bit of time for this to sort of the RSI to sort of cool off, come around down to this oversold area, and then have a little bit of a shoot back up there. So I'll sort of nail down into it a little bit more, but I'm probably looking for a little bit more sort of downside with gold sort of through this week and maybe coming in touch with this sort of trend line, depending on the speed that it comes down. But yeah, around that sort of 4,000 to 4,050, and then sort of see what the buyers do and see if they sort of come back into to give it another drive up there. Another one sort of just confirming that if we see this as a beautiful drop off on silver here, which actually I have to admit sort of like, I got slapped a lot of times through this week. I shorted silver from 54, I shorted gold from 66. So yeah, they very much sort of paid very well into the end of that week there. But as you can see, I've been looking for downside, and it keeps going up through this sort of stuff over here. Though I did sort of make a note of a couple of things with $50. And the reason I was sort of trying to short, particularly this last move up here, one, we had this negative divergence moving up here, but these things have been negative divergent for a while. It's kind of been ignoring it a little bit, but $50 here, right? So if you look at, I won't bother going back on the chart now, but the first time that gold went over 2,000, spent 5 days above it, and then it sort of corrected down underneath it. I believe that the $50 line is kind of like the 2,000 for gold. in the sense, okay, it's up. Had a little bit of fun up here. 1, 2, 3, 4, and then the fifth day, bang, come crashing down. Yeah, it's not back down below it yet, but I would say this looks like it would like to come down. And I think if we come back down to these zones, to these previous highs, around that sort of 48, 49, I think a few people are going to be like, oh, geez, what's going on here? And we could see a deeper kind of correction moving forward. That's actually a bit of a trend that you could work off. So again, take out those lows from Friday. I think we start to see a little bit of a continued push down to the downside here. Now, again, I just don't think it's going to come down. It's not going to go like this. I don't think that's going to happen. I think more likely we're probably going to see maybe a push back to these zones over here. Target, say, around 48. Give it a little bit of a sort of rally up effort. And then should we go through 48 again, that's when we come down. And that's when I think we target probably around sort of 42, 43, these kind of levels over here. But I think sort of that's the kind of structure I'll be looking for. A break of Friday's lows, target, say 48, bit of a support, previous highs, yada yada, all this sort of stuff. See a rally attempt and wait for that to put in a lower high, and then a second attempt at that level, wherever it is, if this is where we rally, second attempt at that level, should that break, that's going to be our, okay, bang, we're coming deeper down kind of correction move there. Got to fly through these. Unfortunately, I've got to duck off and help my partner with a few bits and pieces. On to Aussie. So Aussie, actually, look, it's actually holding up a little bit better. 64.20 is where I've been targeting. Got down to 64.40. Another little test of this. It actually rallied quite well, all things considered. It's really detached a bit from. Look, I know it's not part of DXY, but DXY is a broad sense of what the market's doing with the US dollar. And it has been sort of been selling down while DXY has been selling down. And then when they decided to buy DXY up a little bit, they also decided to buy Aussie up. So it's and also Aussie's been coming down as gold's been moving up. So it's a bit all over the place with itself. But that's what Aussie does. It's always a little bit like this. So at the moment, well, at least the last couple of hours of the week, if you look at that chart there and put it alongside DXY, whoops, this one here, you can see both into the end of the week. Put this on the 1 hour as well. They both got bought up. Like that chart looks very similar to that, doesn't it? In the last couple of hours, off the lows, bit of a sell down. Oh, this one didn't match here, but all in all, through the last section, you can see the lows here and the lows here. They both sort of moved up together over there. So it's almost sort of like a bit of a risk on is lesser of two evils for US dollar. And then sort of like, obviously, gold's Aussie's appreciating that because Aussie's a bit of a risk asset there as well. But anyway, two rejections from this level puts it pretty much on the idea that I think we could see some upside into early week. Look, again, it seems to be running inverse to gold. So if we see gold come off, you might sort of consider gold a risk off play, the uncertainty risk off. So that's fine. And as we can see here, Aussie's obviously moving up while metals came off. So should we see gold come off, I expect Aussie to come up over here. What I'm interested about with Aussie is around this sort of 65.20 level. This is a little bit of a channel, kind of, this start point up here is kind of irrelevant, I found. It's more just these two parts here, just because this is going to anchor somewhere. It doesn't matter. There's always going to be some point that it comes off. But, you kind of got a bit of a channel here, and obviously it's kind of trying to push out here. And I think the fact that you got two reversals here, I think it puts the focus on 65.20. So if we actually drag that out, I'd be looking at something kind of like this for Aussie, a bit of a range. So let's call it a breakout box or whatever we call it on here, breakout box. And this is where this is where I'm interested with Aussie. Should we break above 65.20, then we could see some more upside. Should we break below 65.40, 64.20, I'm sure that's where I've got some sort of level of dyslexia. 64.20 is still going to be in play, so there's probably limited downside from this move down here, but I don't think it's going to break this straight away. So maybe targeting up towards 65.20 tests and look for a short would be the safest bet here. So I move up here to short it to try and sort of come down here. This way, one, you've got pretty good sort of resistance levels through here. You may get a bit of a back test chance to get out for even should it break through. But at the same time, you're probably in the high likelihood that we are still selling down, and there's probably a high likelihood that if we do see US dollar run a little bit, it's still got a cap. Even though they were similar in the last couple of hours there, ultimately, obviously, if you're buying US dollar, you're not going to be buying Aussie against it. It's just that it might be a little bit the same. And also, we had that very weak Aussie data, the unemployment numbers coming up. So I think that still adds some weight to Aussie. So I think sort of early week, maybe a push up around that 65, 65.20. Look for a short. That way it gives you that nice sort of leeway should this turn out to be a range targeting back down towards, 64.70, 64.40 gives you a nice sort of, that's a 1% move or so, 1% plus move coming down through here. You're a little bit protected. So I think, we could see some continuation up to test that 65 zone again. Probably be looking for some shorts for the fact that I think US dollar is going to run, for the fact that unemployment numbers are up, percentages are up. So I do think that's going to keep RBA cutting in the headlines, which is going to keep pressure onto the Aussie. And then I'd be sort of targeting for potential of a bit of a range through here. And certainly, look, if it is going to range, that's where you want your entry, top end of the range. You don't want to be entering in the middle. So I think up around 65.20s, I'll be looking to sort of short that. Cool, let's fly along. DXY. So I don't think I covered this, did I? We had such a nice little push up over here, a little bit of a triangle forming. This was the indicator here, the lower high into that resistance. Honestly, I thought this was the move we were looking for before we got the deeper correction. I thought we would have got one more push up and then a deeper kind of correction, but we didn't actually get through this zone and we got the deeper correction. So it's kind of like that was the move, opposed to actually breaking through and then getting the sell back down here. But, found support, rallied into the end of the week. Data's not too bad. I mean, look, we don't have the jobs numbers yet, but, those other bank people sort of put their numbers together saying that the jobs aren't too bad. Inflation, we are going to get this week. That's looking a bit stickier. That's going to be more in the camp of, hold on, wait, you know what, maybe we can't cut. So I still think that US dollar is not dead yet. If you have a look at this actual recovery move from the lows, it's rallied just past the 38%. So I'd still be looking for upside here, sort of through the week. Look, we are back below this zone over here is something to think about. So this would be our little resistance level now. So make that a D1 res level. So, up above, say, 80, sort of 98.60, I think that opens it up. But then I think if you get up above that, I think we're back targeting 99.4, and that's going to be our breakout level. And maybe that'll be the time that we get this move here. But if that comes, I think we've already had that sell down now. I think if you break 99.4, 100's an area you'll get a reaction, but I think it'll be more something like this. And then that could potentially go higher. So, I think the sell down's done. So if we get back up towards 99.4 to test that, I wouldn't want to be necessarily short dollars. And I think that this could push up and that could break up. And look, it's going to work if it's going to be coming in the same time that potentially if we do get a pullback in gold, all those profits and flows of capital have to go somewhere. I've just been saying this for months, that US dollars on multi-year lows. I think that could be where they decide to plant it. Economic data's not that bad. If job numbers turn out to be pretty good, like not that bad, and inflation's up, I think that's where we could see a little bit of it placed. So upside of US dollar here. Certainly I would be looking for through 98.6, through 98.6, targeting 99.4, 99.4, bang, I think that's up and away, but that's major breakout levels over there. So I'm going to put this out. I'm going to call this 99.6, call it 99.6, just a round number, 9.6, breakout. There's your breakout level. All right, and flying along, we got copper. And copper, obviously, I've been looking for downside from the rejection of the top of this range over here. It has held itself quite well, slowly coming back. It's actually sort of finding support on this previous level, which we had marked out, of course, on that drop through. But this is the same thing that I've been saying the whole way up with this thing. Look, honestly, I didn't sort of think it would come this high, but these levels are where people are going to step back in, and this is where we're seeing them sell it off and sell it off, and they've played their part all the way up. So the structure and the sort of mentality behind these things has played out beautifully because, again, these are the levels that I said, people would have tried to buy the pullback. They would have had standing orders here. If it comes down here, expect a rally. This thing chopped through in 15 minutes. So all these people left holding the bag. Gets back up, chance to get out. They sell out. Moves to the next one. Didn't actually do so much here, but it did provide a little bit of a support on the way back through. But got to that next level, sold down. Got to the next level, sold down. So yeah, there is some sort of method to the madness with this kind of stuff. With this, I still think that it's probably got a little bit of a hard time. I think metals are going to come off, and I'm still looking at 4.7. I think underneath this zone, close underneath 4.9, 4.96, close underneath here, that opens up a trade to be sort of coming down underneath this zone here. So from here down to there. 4.7, I think you probably get some sort of reaction for them to try and buy that stuff back up there. And finally, just with the one, it is holding, I suppose. Look, this was the thing that I said when we're coming here. Inverted head and shoulders. I said, look, if we can't break through here, we're going to be doing this. Hence the little breakout box that I've got here. Sold down, smack down, and then finds itself in rallies. This is the box that I'm really paying attention to. A close outside this, I think, is going to be very drastic for sort of US dollar across the board. And a close up above, I think we're going to get a move back up to 719. This is the first idea that we get the break to move higher, but prepared for something should we move up over here. But I'll move this up over here at the moment and say that's kind of your level here. This is a very big sort of time frame support here. This is weekly time frames. So it's going to be quite sort of tough to crack, but it doesn't mean that it's impossible to crack. And if it does crack, well, that means that it's going to be quite a significant break. But I'm still in the idea that we are going to move back up to the top side over here. All right, cool. That's it from me.